Can y'all hear me okay in the back? Okay. Well, it's a pleasure to be here. Like Mr. Dennis said, my name is Mike Deliberto. I'm an ag economist stationed in Baton Rouge, and I do just about everything and all things economics: corn, cotton, rice, soybeans, sugarcane, the whole gambit. So, very blessed and very fortunate to do what I do. My presentation today is going to be twofold in part. Number one, I'll give y'all an update on the market conditions, the way they stood since last Friday. And then the second half of the presentation, I want to talk about some of the research from an economic standpoint we've been conducting at the Ad Center. Mr. Brian Hilbin, my research associate, is here. And really, I think it speaks to the collaborative effort our department has undertaken through the help of Mr. RL, Mr. Dennis, Mr. Keith, Dr. Harold down there at the Rice Research Station, numerous growers, crop consultants that have helped us try to tackle furrow irrigated rice from an economic standpoint. What assumptions are we making in the production process so we can begin to put decision tools and budget templates out there so producers can, evaluate profitability and look at the trade-offs. And we'll get to that toward the end of this presentation. But first, just an update on where the market is. What I've done here is just kind of put a snapshot of the previous 5 marketing years for rice. 2020 saw an increase in production for the entire U.S. rice market, and this is long and medium and short grain rice combined. And this was really the effect of rising long grain prices that we saw in 2019 and 2020. We saw improved weather conditions with broad improved yields, despite some late season Gulf hurricanes that we had in the latter part of the marketing year. But overall, there was about a 59, 60 pound per acre increase in the national yield per acre. So you can see total production is 227 million hundredweight for 2020, and that came on about 2.9 million harvested acres. And that area expansion was nearly all in the South, with Arkansas accounting for a majority of that increase. And on my graph, this line came up a little orange, but for some reason it's light green on here. This is USDA's October estimate of where they think 21-22 rice plantings and production are going to be. They have rice plantings at about 2.6 million acres, 2.5 million harvested acres, but they're calling for a decrease in production. And what USDA did was they accelerated the release of what they call their long-term projections. Typically, they wait till February to look at the market and look at trend analysis, but they put this out in August. So this is kind of like a preseason football poll, right? It's often early to gauge where the market's going to go, but the big determinant on this going forward is going to be prices for competing crops, mainly soybeans. It's hard to argue with $14 soybeans, but competing crops is going to have a lot to say on how much rice goes in the ground next year. Just kind of diving into some of those acreage numbers a little bit. This is just a summary. This gray line is the 2016 to 2018 average harvested acres by state, and I put the 2019 number in there in gold, and then last year's crop here for 2020 in purple. And you can see Arkansas was about 62% of the reason behind why we had so many acres. Favorable prices, Arkansas, Mississippi, Missouri, they had a record prevent plant in 2019, so they're kind of back on par with their production. But it just goes to show you the year-over-year increase that we had, especially in the southern region. The interesting thing about this, with Arkansas and then in Louisiana to a lesser extent, that year-over-year increase was all long grain. We actually saw a decrease in medium grain varieties in both states, and I'll talk more about that in a minute. But really, before we get into kind of the tabular supply and demand and all that wonderful USDA monthly data that comes out, I thought it was just a kind of good to talk about some bullet points of kind of where we've been in the market. The average price of long grain last year was $12 a hundredweight, and I think that was brought on by the tight supplies that we saw. And anytime the market knows that they're going to be in a tighter supply situation, there's going to be some additional risk premiums that the market is going to naturally interject in itself right there. And I think that helps support prices. If you take that first bullet point and maybe compound that with some adverse weather through the growing season, delayed plantings in Arkansas, a delayed harvest, the infrastructure impacts that we've had in Louisiana, again, you see more weather and risk premiums going in there that supported price. And all that was coupled with the fact that we did see increased acreage in the U.S. last year for rice. Production was up about I think total production was up about 22 to 25% total, and that was mainly on the competing prices that rice brought compared to soybeans and corn and what everything was doing last year. So last year's bull market certainly brought more rice into production. Of course, we've had the COVID pandemic and really what was minimal supply chain impact there. I think you had some, I wouldn't say panic buying, but maybe pandemic-induced buying of rice. So I think that helped underpin the global market a little bit. You had some of your major rice exporting countries start to hold back some rice off of their export market, maybe for internal demand there. But we saw strong demand domestic and globally for rice throughout the pandemic. We also made a rice sale to China that was unloaded in November. It's hard to say if that's going to really be the catalyst that brings U.S. rice into China. I know there's been significant inroads made there, so it'll be interesting to see if that actually turns into something that could be beneficial for the industry. It can, but this last bullet point here, the pace of export sales going into the winter months, I think that's really caused a lot of folks in the rice industry to kind of turn their brow up to that and really look at the pace of sales. Where are we compared to last year from a cumulative standpoint? Because that pace of sales month after month after month in the marketing year, that's where the market can build long-term momentum to support prices over the longer period. This balance sheet here, this is trying to summarize the total supply and use. The ending stocks from 19 and 20 were 28.7 million hundredweight, and that's a stocks to use ratio of 12%. That's tight on a U.S. balance sheet. So we started the year off with about 36% less rice coming into the market from last year than normally what would have been. I've talked about that 22% acreage expansion that we saw in terms of supporting production. Arkansas, Louisiana, Arkansas had the largest crop they've had since 2014. Louisiana, we had almost a 32.3 million hundredweight number. Increased plantings, increased yields that we had, and that we were slightly below the record that we had in 2010. So that expanded production really caused supply to increase. A lot of attention, though, in recent months has been circulating and kind of concerning this import number. A lot of that is your jasmine and basmati rice that we have coming in from Thailand and India. India's shipments of rice here are ahead of schedule, but Thailand's shipments of medium and short grain rice are actually down 17% year over year. So USDA has actually backed off that import number, mostly on the medium short grain side of things. However, a majority of that import number, 29 million hundredweight, is all on the long grain side there. China continues to send rice to Puerto Rico. They've sent their first shipment there and unloaded in November. They are able to sell Puerto Rico cheap rice that they hold in their government stocks. They can get it in there through some shipping advantages that they have for us, and that is expected to continue. They've already sent Puerto Rico one shipment, 21,000 tons, and they're expected to send them 2 more shipments throughout the marketing year. So nevertheless, supply is up, but the good news is on the rice balance sheet, that domestic use number went up a lot. And I joke with my students that, saying a lot in economics, that's a highly scientific word, and we put a lot into that. But that domestic use from the USDA rice stocks report, I think the industry thought USDA had been underestimating the use number for the previous couple months in the market. Well, that number appeared in the January WASDE, and we see domestic use of rice going up 11% year over year. And the biggest thing this did was it was allowed us to reduce our ending stocks on the balance sheet. Exports are on par from where they were last year. Again, I know that 0.2% year over year doesn't seem like a lot, but we've had a slower pace of sales to Latin America and Haiti. Haiti's a large milled rice buyer. Latin America buys a lot of our rough rices. I think a lot of that was the logistical disruptions from the Gulf port facilities, the hurricanes early on in the year. The pace of those sales has started to come up, so I think that bodes well and does interject a little price stability in there for the export market. What's buried in that number is a sale of about 120,000 tons of rice to Brazil. Brazil is not a major rice buyer of ours, but the tightness in that South American crop, not only in Brazil, but in Uruguay, Paraguay, Argentina, the whole Mercosur region, it turned Brazil on to buying our rice because it needed some. They sold out of their rice real quick. And I'll talk more about that in a minute. We've also made a rough rice sale to Venezuela, which has been absent from the U.S. market for some time, again, finding inroads in these non-traditional markets on top of the Latin American buyers certainly bodes well for the export, the use number, and ultimately price. Use is up 6%. Ending stocks, even though they're up 33%, that stocks to use ratio is in a lot more manageable positions. Typically, whenever ending stocks and stocks to use go up, it has an inverse effect on price. A few comments just on the medium grain side of things when we start to look at rice by class. Another shorter crop in the medium grain side of things. Again, we saw a reduction in southern medium grain acres. California is the major driver behind this. We don't export a lot of southern medium grain rice out. The varieties that come out of California, that goes to South Korea, Taiwan, Japan under WTO commitments. But it's interesting when you kind of work down here and look at where the average farm price is. This is the southern medium grain price. But when you look at the dynamics behind the California prices that come out of the West, you had some aggressive buying by some of the mills in California early in the marketing year because there were concerns about, well, okay, well, what was next year's crop going to look like? What about the snow melt? What about the rainfall? So they bought rice and booked rice a little earlier than they normally did. So that kind of helped support their rice prices. But I think the thought that there's going to be a reduction in the southern medium grain acres here in the South certainly helped our price going forward. So you can see the southern medium grain is 1230 a hundredweight next year. Long grain, I'll spend a little bit of time on the long grain balance sheet. We talked about that acreage expansion there. 170 million hundredweights was where the U.S. was last year. This is anticipated production by USDA for next year. We're down about 14%. 1.9 million planted acres, about 1.8 million harvested. So they're projecting a smaller long grain crop here in the U.S., mainly because of corn and soybean prices. And that's going to really create a tighter situation this year. Maybe not as tight as what we had last year, but it's certainly adding momentum to the price rally that we're seeing in the market. The long grain balance sheet, again, we've had the smallest carry-in of long grain rice we've had since, I think, 2004. We're down about 50% from where we were to start the year. Acreage expansion, increased yields, total rice supply is up year over year. Domestic use of long grain, again, that when that rice stocks report came out last week, that shot futures up on the nearby. It's about 30 cents a hundredweight. Ending stocks more manageable at 26.3. Last month, we were almost sitting at 39 million hundredweight. So USDA has a $12 long grain price right now, same as they had last year. And the interesting thing is, typically when you see ending stocks and stocks to use jump up, you see that price start to go down. But since it is at that $12 hundredweight, it indicates that that tightness in the supply, it's real, it's being felt in the markets, and with I guess, uncertainty over how much rice acres we're going to have, it is kind of building a little bit more of a premium into the market. This is a rough rice exports slide here, and that red line is where we are right now with our rough rice exports. And you can see August, September, October, beginning of the marketing year, those logistical disruptions in Louisiana and its import facilities really was concerning. But since then, we've really increased the pace of our sales. And again, what was concerning early on was, were these stocks of long grain rice, were we not going to be able to ship them out? Were they going to stay on the market? Was that going to increase carry out? Because that bodes negative for prices. But I think that we've had some pretty good weekly rice export sales, and I think that's starting to help the export market and be favorable for the price outlook. I knew everything was going too fine. Let's see here. Oh, there we go. This next slide is something that is a little bit dated. I showed this last week in Abbeville. This is just kind of a cumulative look, and I won't go through all the numbers right here when you look at export shipments, but the thing to note is we were, at the end of December, about 14% down from where we were in terms of the cumulative sales last year, and I think a lot of that was that some of those disruptions we saw earlier in the marketing year. But despite the fact that we've had a larger rice crop in the U.S. this year, the fact that we've seen shorter crops coming out of South America and these non-traditional buyers looking for American rice has certainly helped our export and helped prices. I'm trying to advance it, Mr. Oriel. There we go. Okay. This is just a price slide here. I want to talk about this blue line. This is the monthly long grain price as published by USDA. And all throughout last marketing year, you could really see that just month after month appreciation in rice prices. And that was just tightness in the market, strong export sales, shorter crop, all contributing to that rise in where long grain prices are. $12 for long grain, $12.30 for southern medium grain price. So I think we did see a dip coming into the marketing year now, but I do want for these prices to rebound. Okay. Just a little bit about rice futures. Where the March contract, where it closed Friday, January 14th, over $13 a hundredweight. And one thing about rice, it's a little different than corn and soybeans in the way the futures market operates. It's thinly traded compared to those other two. But I put the 50-day and the 10-day moving average here on this March contract because really for a long time this contract was really range bound between 12.45 and 12.75 a hundredweight. But the key thing to look for right now is whenever these prices start to rise in the futures market, the biggest thing to look to is where does volume and open interest go. If the price starts to increase, you get to see a rise in volume, a rise in that open interest in the futures market. It can really say that the market really is kind of fueling that rally. There's enough buyers in the market there, and it does bode well for maybe a continual increase or at least a sideways pattern at higher price levels here. I think with prices right now in the futures market, when you look especially with the September contract is going, these prices are pretty attractive for rice acres in the South. Now I know with this morning, I think soybeans, it touched $14 a bushel on the nearby. That certainly kind of kinks the hose a little bit with how many acres we're going to have in soybeans next year, because it's hard to argue with $14 soybeans, but I'll get to that here in a little bit. But I did want to talk a little bit about where future momentum can come in this market. Talks of an Iraqi tender have been long discussed, really since November. Their economy starting to improve a little bit. The money they have, price of oil is going up a little bit, but also momentum ahead from the Mercosur, from that South American trading bloc. If that shorter crop in South America turns into them needing to get rice from us, that may give the market the momentum it needs to fuel a shorter crop, a reduction in plantings, with coupled and accelerated export demand. It'll certainly help. So, for new crop rice, this was an old bullet point. Steady undertone in the market. The trading isn't creating pressure to appreciate prices. I think we can kind of say it wasn't creating pressure. Now it is with that shorter crop, the ability of us to kind of get back on track with our export sales. We see some increasing on new crop futures. Export demand and pace is going to be the biggest thing to watch going forward. Brazil or Iraq business can certainly change that. But the tight supply situation in Brazil and the Mercosur region is definitely something to keep an eye ahead of. But Iraqi consumption is facilitated by private imports, depleted government stock levels, and a sharp fall in country. So I think when they come to the market, it can be substantial and it can be very, very beneficial to the U.S. sector. I won't go through every South American country, but the one takeaway, smaller crops there. And that's going to help us compete. Brazil. This is the only Brazilian slide I have in the presentation today. This was Brazilian rice exports in 2019-2020 when the pandemic really started versus their 5-year average in the blue line and their marketing year average from a year ago in the red line. And look at that. Their currency was down 30%. They had a weaker real. They sent a lot of rice to some West African countries, and it really helped improve the profitability of the rice sector in country. But they had a lot of rice early on that they sold, and their supply is not only tight in country, but they really have no exportable supply. And you couple with the fact that Brazil has seen a pretty substantial rise in the price of food and what they're going through with inflationary factors in country there. So that'll be something to watch as well. This snapshot just talks about where our rice is. The red line is U.S. Long grain mill prices compared to Vietnam and some of the Asian importers. One of the takeaways from this, I'll call your attention to that green line right here at the bottom. That's India. India, #1 rice exporter in the world. They have rice. They're willing to sell rice, and the exportable supply in this country is almost through the roof. Year after year increases here in India. You have countries in Southeast Asia like Vietnam and China actually buying rice from India for the first time in nearly 30 years. So that's the market outlook. Shifting gears a little bit, I want to talk about some furrow irrigated rice. This slide highlights some of the work we've done and some of the work that's on the website right now, and I have some links to that in the presentation. But our first attempt was to create an enterprise budget specifically for furrow irrigated rice here in the northeast part of the state. And we looked at a non-Clearfield hybrid and a Clearfield hybrid varieties, and we just kind of try to talk budget shares. The non-CL variety, difference in herbicide cost and seed cost differs between the two. But you can see we're estimating variable cost anywhere between $722 and $748 an acre. And this is going to be dependent upon a lot of things. Seed selection, price of seed, fertilizer requirement. Row rice has got about 100 pounds more of nitrogen per acre that is needed to kind of improve their nitrogen use efficiency. And herbicide, in the absence of those flooded conditions and the duration for canopy closure, how aggressive do we get with herbicide recommendations? How much herbicide do we need? What's the weed pressure field to field? So again, working with Dr. Harrell at the research station, working with the crop consultants, the county agents, trying to at least come up with a starting point for what this production system could look like. This is where the variable costs are. When you look to compare these costs to, say, a traditional flooded rice system of, say, just a traditional Clearfield variety here in northeast Louisiana, the traditional flood system is the green bar, and then our non-Clearfield is purple. That gold line is the Clearfield hybrid, but both of these would be in a furrow irrigate system. And you can see the seed cost substantially more than traditional Clearfield, increase in herbicide cost. We do see an increase in those fertilizer costs, big increase in fungicide costs, and a lot of this is going to vary. But one thing we found was that when we look at the fuel and the potential savings on labor and fuel, that's when we start to see some benefits to the cost side of this with a reduction in your irrigation cost. We currently estimating 6 irrigation applications at 26 acre inches total, a 3-3, 5-5-5-5 split there. And again, this is in some of the budget documents that that we have. Let's see if we can. It's this slide. Some of the work we do every year is looking at early competability on different crops. And what we do is just looking at furrow irrigated rice. We look at the total variable cost. I've just kind of midpointed it at $730 an acre. We look at our total fixed cost of $70 an acre. Puts rice about $800 an acre to produce. If we say we have 8,500 weight or about 8,500 pounds per acre, what prices are we going to need to see in the market so the grower can cover their variable costs, or what prices do we need to see so they can cover their total cost? And between 858 and 941 would be the window for a grower can capture anything above that. That's in turn grower profitability there. So a lot of factors contribute to this, and this was just some new crop futures contract as of January 15th, as of last Friday, to say, well, if I know what my break-even costs are, where are the market? What's the market conditions looking like now? And I know it's early to tell. We don't assume a basis level or anything like that in there, but it's useful to examine from a budgetary standpoint. When you compare rice and soybeans, this was a slide I put together a few weeks ago, so these prices are a little bit dated maybe for soybeans. But one thing is the impact of rental arrangements. Where are we going to be? Because obviously few people own their own land, but when you look at furrow irrigated rice, even on an 80% grower share, furrow irrigated rice can really compete with soybeans when you look at different yield levels. But again, there's so many factors, and I'm going to skip this and come to this decision tool. Price, yield, input cost, grower shares, cash rent, share rent. Through some funding from the Rice Research Board, we've developed a tool where growers can go in and put their cost per acre, their rent, whether they're on a share or a cash rent basis, the prices of rice, and also the price of, say, soybeans. And this table will say, okay, at what prices of rice and what rice yield do I need to make to be in the yellow so that rice can outcompete soybeans? And in this case, furrow irrigated rice. We do the same thing for corn as well. At what price and yield combinations does furrow irrigated rice need to be subject to how much I'm spending to make it profitable? We've also have some other tools here. We've got our cash flow model that can help growers look at their variable cost and their return levels. We've also got some rental arrangement tools here when you can look at changing production cost and yields and the effect that that has on price. in yield. I will say real quick, last couple slides, the enrollment decision for ARC PLC is March 15th for the 21 crop year. If you haven't done that with FSA, making an appointment, you will have to re-enroll. And I think I have one more slide here. Oh, the PLC projected payment rates as of last month. Rice still drawing a PLC payment for 21. Or 20, excuse me. We've got some decision tools we've just released to look at our PLC for the next year. You can get those through your county agent. Your crop monthly market and the quarterly policy newsletter. I'll be around if you want to get added onto that. Send me an email. But here's the ways you can access all the stuff I've talked about. Every tool, every report I've talked about, they're on the internet here. Mr. RL, y'all said y'all were going to make this available. Yeah. They're the direct links. And I can't thank the funding boards enough for the support that they've given me in the department, the Louisiana Rice Research Board being one of them. So I know that was a kind of a lot of information. If y'all got any questions, I'd be glad to.